to you.
All right, Sheila, thanks so much. Exceeded expectations after pricing last night at $26 a share. The stock shot up the moment it began trading today. Take a look at closing today at $44.90. This is the after-hours quote at $44.35, but this puts Twitter with a valuation higher than the likes of Netflix. Is it worth it? Andrew Stoltman is with me. He's a securities lawyer and a shareholder advocate. He doesn't think so. Amish Shah is founder and managing partner at Sierra Maya Ventures. He is a Twitter buyer. Gentlemen, good to see you. So, Amish, today you bought 1,000 shares of Twitter. Is that right?
That is right. That is absolutely right. In fact,
what did you buy it at? What was the price?
You know what? I put it in. I didn't really care what I got the price at because I'm so bullish on this stock. In fact, I believe when I looked this morning, I think I got about $45 and about 10 cents when I looked at it. And the way I look at it, Maria, yeah, I got a newborn coming in January, and I'm looking at this as a long term. I'm looking at this to fund his college education. I did the same with my daughter 2 years ago when Facebook went public, and I'm bullish on that. I think that'll pay for her education as well. But I love Twitter.
Really? Andrew, what about you? You don't like Twitter at all. Why?
No, I don't. I mean, I kind of feel like we're in the movie Groundhog Day. I mean, if you look at the financials, they're absolutely horrible. You have a company that's losing money in the past. They're losing money now. There's no prospects of really making money in the next couple of years. They have a non-diversified earnings stream in terms of the money they are making. The growth is slowing in America. Any big competitor could get into this industry and do the same exact thing Twitter's doing. I mean, we saw the same exact play with Groupon recently, with Facebook that got absolutely hammered before it came back. It's a horrible stock. I wouldn't touch it with a 10-foot pole.
Oh, my God. He's counting on his college education for his kids here.
Yikes.
Come on,
I hope
Andrew,
she's going to community college.
Let's go serious. Let's get serious. This is not Groupon. This is, I mean, people on Twitter right now, if you look, Lady Gaga tweets, people listen. This is the new E.F. Hutton. Twitter is like E.F. Hutton. When someone important tweets, everybody listens.
The best
when Carl
possible
Icahn tweets about Apple, the stock moves up.
The best possible case scenario is already baked into the price. Right now, the price at 45, that assumes everything goes right. We don't even know how this company's going to make money. They haven't even shared it with us. We just don't know.
They made $422 million this year. They're on pace for over 600. They're going to do over $1 billion in sales just on advertising next year.
How much money are they making?
We got to jump, guys. We got to jump. I love this debate, but we've got Disney numbers out, and we got to get to them. We appreciate it. Thanks very much. You both make very good arguments. We'll be watching Disney shares, as you can see, on the move on the heels of the fourth quarter earnings and revenue coming out right now. $11.57 billion in revenue for the fourth quarter. Julia Borston with the numbers. I'm breaking them down. Over to you, Julia.
That's right, Maria. Disney reporting both better earnings and revenue than expected. As you mentioned, $11.57 billion in revenue. That's better than the $11.4 billion in revenue projected and up from $10.78 billion in the year-ago period. Now, earnings per share came in at 77 cents. That's 1 penny better than expected and up from 68 cents in the year-ago period. Now, looking at some of these different divisions here of Disney, this is the first quarter that the interactive division has become profitable. That, of course, is on the success of their new video game platform called Infinity. We're also seeing some increases in the parks. The studio is showing growth, studio entertainment growth, consumer products growth. And also, you know, and the media networks revenue is up as well. So just going to continue to dig through these numbers here. There is an issue of deferred revenue, which is why the media networks operating income is down. But otherwise, we saw Parks and Resorts operating income, Parks and Resorts operating income of 15% and 17% for the quarter and the full fiscal year. This is their fiscal fourth quarter. Back over to you, Maria.
All right, Julia, thank you so much. By the way, Disney Chairman and CEO Bob Iger will talk with me in a First on CNBC interview coming up. We will run through these numbers, get the lowdown on Disney's newly inked deal with Netflix to bring some more superheroes of flying across your favorite screen. And we'll find out how the force has been with Disney since buying the Star Wars franchise from George Lucas. Disney's Bob Iger is next. Stay with us.
At Scottrade, our clients trade and invest exactly how they want.
With Scottrade,